Have you ever been given a thick stack of paper from your employer and have absolutely no idea what the benefits in front of you actually have? A majority of companies now offer group plans as a way to incentivize employees to come work for them. Understanding what the benefits include and the retirement options that you have will help reduce confusion down the road. Number one is group benefits. A large majority of companies offer group benefits as a way to supplement extra costs that provincial health plans may not cover. This might include things such as dental, vision, any paramedical services, chiropractor, massages, or any ambulatory services. The amount covered will be detailed in the plan, and there are a couple of key terms that are described. The first being premiums. This is the amount that might be deducted from your paycheck, or it might be employer sponsored. The second being a deductible, which is the amount that you have to pay before a claim can actually be made. The third is co-insurance, and this is actually the percentage that you have to pay, and the percentage that is not included is what your employer or the group plan will be paying. And the last one being a benefit maximum. So this is the percentage or a dollar amount that your plan will cover up to a specific period or potentially just for the year. Now, some group plans can be very comprehensive and have great coverage, and some might have very minimal coverage as well, depending on the company that you work for or depending on the group plan. You may also have an additional health spending account, or this might be the only thing that is offered to you in the group plan. Essentially, a health spending account is a dollar amount that can be used for any sort of medical plan or any sort of medical expense that is not covered through any provincial plans. Within your group plan, you may also have access to life insurance, disability insurance, or critical illness insurance, or you might have the option to purchase more. The second potential benefit that your employer might give to you is a defined benefit pension plan. This is an employer-sponsored plan that uses a formula based on you, the employee's length of service and potential earning history. This form of pension is quite common amongst government employees, nurses, RCMPs, teachers, and potentially other employers, but it's becoming less common in today's careers just because of the liability the employer has to pay out a certain amount of benefit each year throughout retirement. This plan is employer funded and is put into a tax deferred account that eventually will pay out upon retirement. Depending on the plan, you as the employee might be able to direct a percentage of your pay actually into the plan, which will increase your benefit down the road. If you have a defined benefit pension plan or a DB plan, be careful not to overcontribute to your RSP. When you file your taxes, you're going to see a line that says pension adjustment. Make sure that you don't overcontribute to your RSP by having that number, the pension adjustment number, and your amount that you contribute to RSP being over the maximum amount of room that you have. The pension adjustment is simple. It's the amount that your employer put in, plus maybe potentially what you put in as well. Depending on your goals, utilizing other accounts such as the TFSA or a non-registered account might be a better option if you're looking to spend those funds prior to retirement. Think of a DB plan like an annuity. It guarantees a certain amount of income for life or for a specific period of time. Some plans are indexed to inflation, which allows you to keep up and maintain your purchasing power throughout retirement. And then also when you hit retirement, you might have a bunch of different options on your DB plan, such as joint ownership and the survivor benefit. The third potential benefit that you might have from your employer is a group RSP or a defined contribution pension plan or DCPP. A defined contribution pension plan is just like an RSP where the employee, instead of the employee actually gets to choose a percentage of their salary and to put towards the plan. Now, sometimes the employer actually has outlined that they're able to match a percentage of what you put in. I always recommend if your employer is willing to give you free money to match your contribution, you might as well fully max it out. A group RSP and a defined contribution pension plan is essentially the same thing, except for with a defined contribution, you might not be able to withdraw, or most likely you won't be able to withdraw those funds prior to retirement, whereas a group RSP might allow you to depending on what's detailed in the plan. The main difference between a defined benefit and a defined contribution is the employee will take the risk on the defined contribution. They're the ones choosing how it is invested. Whereas a defined benefit, the employer gets to choose that because they are guaranteeing a payout during retirement. When you receive paperwork to enroll into a defined contribution plan or a group RSP, you'll have a bunch of different investment options that you can choose from. At this point, if you're uncertain on what investment options to choose, because there's so many to choose from, you'll have a plan advisor that you should be able to contact, that they'll be able to help you determine which investment options are suitable for you. The 3 employer group plans that we talked about today, number 1 being group benefits, which is your medical, prescription drugs, potentially massages, chiropractor, ambulatory services, being a amount that is given to you that you don't have to pay up and above your provincial health plan, or a health spending account, which is just a fixed dollar amount that you can allocate anywhere. The second being a defined benefit pension plan, which is less common these days, but most common for unions, where they have a set amount that is determined through a formula that will pay out in retirement. And the third being a group RSP, or defined contribution pension plan, which is the most common, is a plan for retirement ultimately. Thank you very much for listening, guys. I hope this helps you understand a little bit more about the group benefit plans that you have. There's so much lingo in our industry and so many different terminology. Hopefully this just allows you to break down a little bit more and to understand and utilize the benefits that you have.